Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. Complete the quiz to earn your CPE certificate. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com. And now, on to the event.
Hey everyone, I'm Zach from Earmark, and thanks to anyone who's here live or watching this on demand. Welcome to Master Employee versus Independent Contractor Classification Rules. And I'm going to hand this off to your instructor for today, Rhamy. Rhamy, please take it away.
Hey, thanks for having me. Ladies and gentlemen, it's lovely to have you here. We're going to be talking today about a core compliance concern around employment. Primarily this discussion of whether someone is an employee or an independent contractor comes up very often in small business, and as a CPA, CFO, financial advisor to your clients, you're uniquely positioned to identify this risk and turn it into an opportunity to advise your clients, deepen your relationship, and head off some serious problems. So I want to start by telling you two very basic stories that have literally happened in the last year. My company, People Processes, does HR for other companies all across the US, and hopefully we're brought in on a proactive measure. Oh, we want to get our stuff straight. A lot of times we're brought in because the stuff has already hit the fan, right? So we're going to be, I have plenty of fun stories, and at any time, please drop comments, ask me questions, and we'll be happy to talk. It's going to be a fun lesson. So first, I want to talk about a school up in Maryland. Maryland has this school, and they are a Christian college. They teach seminary, but they also give degrees in business and that kind of stuff. And they have a staff of around 20 teachers and 10 administrators and principals who also do some teaching. That's all fine. They also give music lessons, reasonable for their college students, and they do some general ed classes like shop and some others. And for those people, they hired teachers. They called them adjuncts, adjunct professors. And what they would do is they'd hire them for one class. It's like teach for 13, 16 weeks, whatever their semester was. We'll pay you $200 a week, whatever it takes, teach your class. And those teachers that they brought in, they simply 1099 them. So that is a key decision, right? They said, this is no big deal. We're bringing them in to teach violin, whatever. And they did this for a few years. The issue came, as we'll discuss, as it normally does, in the case of an unemployment filing that led to an audit. And what was found in that group, which was a larger group with around 40 affected contractors, the lawyer on behalf of the worker who was classified as independent contractor who disagreed, subpoenaed their records, was able to get 30 of those 40 people to join a suit, and they settled for $1.5 million in misclassification. Another example that's come up just in the last year for me is an accounting firm, which I thought would be relevant to you all. This was a small one. It was just a 5-person shop, 1 true CPA and 4 contractors. And they had brought these contractors on to do bookkeeping. And this is a small firm. It was actually work from home moms mainly. And what she did is she simply paid $100 a month for per client to these contractors to do the day-to-day sorting, file uploading, and maintain their QuickBooks connections. That was their kind of job duties. And it's, one person had like 8, one person had like 20. These were all part-time positions. And she simply 1099'd them. She was 1099'd by her clients as a CPA, as an accountant to do bookkeeping and finances, and felt she should be able to do the same. Her longest serving employee after 5 years, or worker after 5 years, was fired And that led to significant legal issues where she claimed she should have been an employee and that she worked significant overtime and did not make minimum wage. And again, once again, this was a key case, and it's actually still ongoing. The legal fees alone have been over $50,000 for that accountant at this point. They did not have insurance that covered that decision. So it's been a bit of booger. So those are going to be some of the key, those are some of the results that can come from this. And I hope those stories caught your attention. We're going to be talking today about 3 primary learning objectives. Those objectives are to identify the criteria for classifying workers as independent contractors or employees, recognize the legal and financial consequences of that worker misclassification, and understand the process for correcting past misclassifications that come up quite often when you do discover these issues. How do we go about fixing it? Okay. So let's talk first about that basic choice, classification of W-2 versus 1099. It is not the owner's decision. You don't get to say they're fine with it. There are different legal frameworks depending on the state that you operate in, but across the nation, there are 2 that apply. One is by the Department of Labor, that's the Fair Labor Standards Act guidance, and the other is by the IRS. We're going to dive deep into the IRS one because it's, of the 2, a little bit the more stringent one. In many states, for example, California, they have an additional test called the ABC test. There are also some variations in this in certain small states like Montana and in New York City, some of those other pieces. So we're going to focus in on the IRS common law test because it's a very comprehensive one and gives you a good idea of what these steps look like. So a worker is brought in to do work. And the question is, do they get the protection of employment? Employment means I have to withhold their taxes as an employer, both at the state and federal level. I have to pay unemployment. I have to pay Social Security and Medicare on their behalf. They may be entitled to time off. If you're a larger company, specific medical leave acts, maternity leave, sick leave in about 18 states. There's quite a few reasons why people don't want to make employees because it costs time, money, and has some issues. Whereas contractors, of course, are just like hiring another business. You're simply limited by the contract. Any differences in opinion become a civil matter, not a criminal one or a Department of Labor issue. It won't be the state versus your client. It would simply be employee or worker versus client in a civil lawsuit, small claims court or large claims court. So people want to have 1099s. The IRS knows this. The government knows this. They passed employment protections for a reason, and so they have laid out the guidelines on whether or not someone is an independent contractor or an employee. Okay? So when you're talking to your client and they go, oh, they're fine with being contractors, they prefer it, it doesn't matter. And if they change their mind after you fire them from stealing from you, well, they're going to win. Okay? It's actually based on these factors. So let's dive in. The first thing in this common law behavior test, or the IRS test, there are 3 kind of sections. There's behavioral control, financial control, and then the relationship of the parties. And we're going to dive into each one of those a little bit. Now, there's a lot to cover in this, and there's lots of key questions. Just so you know, I'm going to have on the screen a link where you can download a work guide, or just a matrix where you can go through and kind of check the boxes and figure this stuff out. I'll put that on the screen in just a minute, and we'll drop it in chat. But first, I just want to share, I want to go through them with you. So let's talk about the first one, the key one, behavioral control. IRS factor behavioral control is about how much control the employer or the company has over the worker. I keep using the word worker instead of employee or independent contractor because this is about figuring out whether they're one of those 2. Okay? How much behavioral control are they exerting? Do they control when, where, and how work is done in general? If the answer is yes, they're likely an employee. Do they provide the supplies, materials, and equipment, the company? If so, again, probably an employee. Let's think about an example of an independent contractor. I have an office here. It's fine. I'd like the walls to be bright green like my logo. And if I were to hire a painter to do that, I may have them come out, they quote it, and I say, cool, I'd like you to do the work between 9 to 5 or after 5 p.m. because I work 9 to 5 sometime next week. And they go, sure. Okay. And then they give me a schedule and they do it. I don't provide them paintbrushes or paint, and I don't tell them whether I want it rolled or I want them to roll in this pattern, or here's how I want them to keep their inventory, or here's how I want them to cut in the edges. I just say I want it to look really good, right? It has nothing to do with my business of HR consulting. I want my painting done. That's an independent contractor. They provide their own supplies, materials, and equipment. I hire the guy who came out and quoted me, and yet he shows up with 3 people. I don't care. He's able to delegate that work. Worker delegation is a key sign of independent contractor. Is it required to be performed on the business premises? This is listed in their control factors. Back in the day, there were lots of things that you had to do in office, and it was a sign that they're more likely to be an employee. None of these are knockout questions. That's important to understand. It's not even about there's 2 out of 10 or 3 out of 10. What it comes down to is the economic reality, which we'll come to in a minute after we get through these tests. But in general, for each one of these items, you're leaning more and more towards an employee. Do you provide training? That's company provided training. If the company trains the worker, it's an employee almost entirely. There are very few independent contractors. Again, I wouldn't train the painter how to paint. I wouldn't train my CPA how to do my tax return. I wouldn't train my attorney or my website developer. Those are independent contractors, and I don't know how to do that. That's why I hired them. Do I provide company procedures, methods, or processes that I control or that I tell them to follow? Again, maybe this is how I want security done. I want you to have a badge, something like that. Could be okay. But if I'm telling them how I want the website built, this is the process to follow. I want you to do a discovery. I want you to write all of it down in this particular place. I want you to keep notes in my system. I want you to, those are processes and procedures. Do they have any required reporting? Okay. Consistent reporting is likely a sign of employment, right? Give me your weekly update. Tell me how you're doing, blah, blah, blah. Now, is it definitive? No. If I'm building a house, I want my general contractor to let me know once a week what's going on. But it's probably his reporting that he's giving to me, right? I didn't tell him to fill out my project management form. He's the expert, okay? Who hires, fires, and supervises assistants? If you have an independent contractor, and then you're also hiring their delegates, their assistants, you control them. Maybe you have an independent contractor like a head of marketing, like a marketing manager, something like that. And then you hire employees that they wind up managing, or you hire other people that they wind up managing. You're the one hiring and firing the assistants to that person. These all imply behavioral control. So these are key factors, the first, behavioral control, that you have to review in the case of independent contractors. Okay? It's not exhaustive, but I want you to be familiar with them from a descriptive piece here so that when you're thinking, should this person be a 1099 or a W-2, you have a heads up. Next up is financial control. And this one is almost more definitive than even behavioral. Behavioral can get a little gray sometimes. There are times I tell my accountant, these are the things I want. Financial control, kind of cut and dry. Does the worker operate a separate business? What does a separate business mean? It doesn't mean they formed an LLC, though that implies that there's a business there. It means, does that business have their own costs? If your independent contractor doesn't have their own bookkeeping costs, their own marketing costs, their own printing costs, they're not really operating a separate business, are they? If you pay them a fixed salary, hourly, or piece rate, it is likely, again, that they are an employee, right? It is possible that they're not. Of course, we pay our CPAs and our attorneys hourly rates, but as opposed to a project basis, it is likelier that they are an employee, okay? Are there business reimbursement expenses? Okay, so there should be expenses in running a business. If there are no expenses, then they're probably an employee because you're providing everything they need to do the business. Or if you're reimbursing them, for those expenses. That's also a sign, because again, businesses have their own expenses. Is the worker's investment minor compared to the business's? This is a good sign. Let's take a lawyer, for example. They go to law school, they pass the bar, they set up their own office, they have their own errors and omissions, they have all their own expenses, and you're contracting them to evaluate a contract for 15 minutes or 2 hours or 5 hours or 50 hours, whatever. Your investment is minimal compared to theirs in the development of it. That painting company we talked about, I didn't buy ladders for them. I didn't buy, a truck. Their investment significantly outweighs mine. If you're an accountant and you hire a bookkeeper, which we're going to get to in a minute, and you hire another accountant and you say, hey, I want you to do this stuff. And it's like, hey, you're giving them the software, you're giving them the clients, you're doing all this stuff. You're doing your investment is huge compared to them just showing up. Kind of probably an employee. This all boils down to the economic reality. If the worker has no ability to make profit or lose money, then they are not a business. Okay? They need to be able to underquote your job and lose their shirt, just like you've done. I know you've done it. I've done it, right? Oh yeah, that'll be an easy one. Yeah, $5,000, and then you're still in the weeds 2 years later. Okay, so if they don't have the ability to lose money, they're probably an employee. And then if they can't work for other businesses simultaneously, again, likely an employee. Now, there are independent contractor relationships that are exclusive, but they're relatively rare. Most of the time, exclusivity is a benefit of employment. So if you're, again, dominating someone's entire work schedule and they are the only working for you, that's a very good sign that they're an employee. The last factor is about the relationship of the parties. This is a place that I see people mess up, even if they get the other parts right. If you provide employee-type benefits, PTO, time off, of course, health insurance, major medical, retirement funds, those are exclusively the domain of employment. The second one, and this is probably the biggest one that I see people miss out on, is that the services being contracted are a core business activity of your business. You, accountants, can hire me as an HR consultant. You can hire my company, People Processes. I would love to work with you. And you're not going to have to put me on the payroll. I'll send you an invoice, right? I am not a part of your core business activity. But what if you hired me and then I turned around and have a bunch of HR consultants and I just pay them direct 1099? They're not my employees. Well, HR consulting is my core business activity. I can't outsource my core business activity to a 1099. That would be an employee. You can outsource HR, but I can't. Okay? Does that make sense? So what does that make you think about as accountants? Yeah. You need to make sure you're defining your core business activity. It's well defined normally on your website. If it says on there, I do bookkeeping, accounts payable, accounts receivable, tax returns, controller services, and I'm a CFO, right? Those are all your business activities. And then it turns out the only thing you do is tax returns, and everything else, right? You just subcontract people to do. You're infringing on your core business activity. The basis of this is actually the argument for Uber in California. If you guys remember, they have a slightly different setup, ABC, but it's very similar. And one of the key pieces on that is, what is Uber's core business activity? See, when it started, all it did was put driving, right? It was cars for transport. California said all of these drivers are employees. They're not independent contractors. And the primary basis of that was not, all the drivers work full time. It has nothing to do with that. You control their hours. No, they set their own hours. The core argument was that Uber is a company that is a verb that means to take an Uber, to drive, so have somebody drive you to the airport. You're a company that provides transportation services, and therefore the transporters are a core part of your business. Uber says, oh, no. We're not a transportation company. We're a software company. We connect people with cars to people who want drivers. Our engineers here are all salaried or all W-2 employees. We don't 1099 our engineers because we're a software company. The drivers are independent contractors. They're just using our service. Okay? So it's important to define your business correctly. That case has gone everywhere and nowhere, so I'm not going to get into it. But that's the core argument a lot of times, especially in small businesses and professional services. That's where I see people make the mistake the most often. Okay. So if you, another piece of that, services are a core part of your business activity. Can the employee be discharged at any time without a lawsuit? Another way, it's poorly phrased. The IRS actually wrote it that way, which drives me crazy because obviously sometimes you can't fire people without a lawsuit too. But the key here is there a contract that says, you know, for example, I hire that guy to paint my office, right? And so I give him $1,000 down payment, and then he shows up, and then I'm like, hey, go away. I don't want you here anymore. Why? Because I don't like you anymore. Do I still owe him the money? Do I get my deposit back? Those are all contractual obligations that give you an idea. As a rule, that's more common in independent contractor agreements. If the contractor agreement has no termination procedure that results in some cost to somebody, then it's probably an at-will employee, right? You don't most of the time when you enter independent contractor agreements, you're contracting someone for a period or a project, and there are rules about quitting halfway through, right? If you have to follow some sort of rule, give a 30-day notice, you're still on the hook for 3 more months, whatever. Those are all signs of independent contractor. If you can just say, never mind, stop coming in tomorrow, that's probably not an independent contractor. Same on the other side. They can't just quit. They come and paint half my office and then just disappear on me. Well, they owe me some money, right? If in your organization you have employees that do the same type of work, that's a big red flag. You got some people W-2, some people 1099. For example, that school I was talking about. Music teachers and shop teachers are still teachers. Some are W-2, some are 1099. It's pretty much cut and dry. And then the relationship expected to continue indefinitely. Again, not a guarantee, but preponderance is that that's an employee, right? I hire my CPA to do my tax return that year. Okay. It's not necessarily a permanent engagement or have some indefinite piece on there. So it's very important to think about when you're structuring these agreements that they effectively have an end. Okay. So those 3 factors, relationships of the party, financial control, and behavioral control, are the core of the IRS common law test. Now, there's an FLSA test, which is very similar, but adds a few things and takes a few things out. And then the ABC test, which A, free from control, B, work performed outside the usual course of business. That's that core business activity thing we're talking about. And C, that it's an independently established business. It's kind of simpler. Can you see how those are basically the same? It's not quite as many questions, but it's like minimal control or free from control is how California puts it, which is a whole different level. Work performed outside the usual course of business. If it's your course of business, it can't be contracted. And then that they're an independently established business. Okay? Those are your key factors to understand. Before we move on, I want to talk briefly about the myth of dual classification, because this is something that comes up every now and again, which is I have employees, but I also want to issue them a 1099. Don't do that. 1099 and W-2 in the same year to the same social from the same tax ID is a huge red flag. The audit is incredibly likely, like 30% compared to less than 1% for your normal return. It's just such an easy pickup for them because it's very unusual that you would 1099 and W-2 someone in the same year. Now, of course, it could happen. You could have hired a graphic designer to do your website and then like 6 months later be like, you know what, I want to hire this graphic designer full time to do our day-to-day work, right? Actually as a core part of our business activity. Sure. But it's not super likely. It implies a misclassification. It happens sometimes. For example, another client of mine has math teachers and they want someone to coach football on the weekend. Okay. Can you see how they would be like, oh, well, we'll just pay him $10.99 for the football coaching, but he's a math teacher, full-time salary with benefits. This is a specific case that the Department of Labor has actually looked at and said that that's too similar. The key is that they have to be very different activities. They cannot fall inside the same management structure. They cannot fall in the usual course of business of that teacher or of that employee, even in a broadly defined way. Both are teaching or coaching. Can't do that. Now, if one of your teachers happens to run a separately established business that you don't really control and aren't going to give much guidance on, and that's outside your usual course of business, for example, that teacher and his wife run a janitorial company that's got a bunch of clients and the school wants to bring them on to do their janitorial work, very possible that that would be fine, right? But can you see how that other business has to meet all of the criteria of the IRS common law test? And most people who have full-time jobs for someone don't normally meet those criteria for their side hustle, okay? And the bar is even higher if you're doing it with the same employer, okay? So dual classification is very, very, very rare. And if your clients have it, likely there's a problem here, okay? Now, I've been kind of diving in very closely on what you need to be looking at in these organizations. If y'all are interested and want to ask about kind of why this is important, just let me know. There's a great advantage to you as a CPA or CFO or financial controller or bookkeeper in these, because in understanding these, because it's a common compliance issue that allows you to deepen the relationship. So if y'all want to talk about that a little bit later, you just let me know. Common red flags: client hires workers for both a core job and a side service. You have that. I just talked about that. Very unusual that you're going to have those. If you same manager supervise both of those roles, going to be very unusual. Okay. Now we have a worker classification decision matrix, which goes through those 3 sets of controls by the IRS factor list, and you're able to get it at peopleprocesses.com/earmark. I'll drop that in the link down below. That's super easy. That's peopleprocesses.com/earmark. And so if you're on there, you can always just download the decision-making framework. Now, there's a couple of other additional downloads on there that we're going to get to in just a second, but I thought that would be a good start for you. Now, the cost of getting it wrong. This is key to emphasize with your clients and your own business. It's not just getting it right, because a lot of people don't. It's how do we fix it and what happens if we don't. So, enforcement triggers. How do we get caught? So let's say you've done this wrong in your accounting practice, or your client has done this wrong in their concrete business. It's common. But is it likely just to come up at random, knowing the likelihood of audit is relatively low? If the IRS audits you, if you guys have been through an IRS audit, and they're looking at the employment and the independent contractor records, they're going to want you to have W-9s for the independent contractors. But are they going to review your contracts for employment classification? Well, maybe, but probably not. This comes up most commonly as a result of an unemployment claim. There are other reasons it comes up, like benefits discrimination issues, whistleblower complaints, and of course, class action litigation. That's really the piece. So let me talk about these. The most common way this comes up is you've got a worker who you've classified, or your client's classified, as an independent contractor, normally for a consistent amount of time. Again, indefinite is likely an implication of employment either way. Maybe it's a small client who started with the first 3 people that they had working for them, the independent contractor, and now it's later. Now they've got 10. What happens is something goes wrong. Everything is fine. The worker likes working there. It's fine being 1099. Everything's good until something goes wrong. The employee or the worker has to be fired because they're not doing a good job. The business starts to go downhill, so they decide to lay off a few people. The employee has to move because they've been called up for active duty, or their training as a reserve. All these reasons why the independent contractor would just be let go. But having relied on this business for a significant portion of time, and perhaps as a large portion of their income, because they don't have a bunch of other clients, they decide to go file for unemployment. And it's very common for these independent contractors to go do that. When that happens, what's going to happen is the Department of Labor in that state, whoever manages their unemployment, is going to reach out to the prior employer, who is going to be reported by that independent contractor. And they're going to say, hey, I have this person who says they were your employee and that they're owed unemployment compensation. Now, if they were an employee on their records, what would happen is they'd say, can you verify their pay? Should they get unemployment? Were they fired for gross misconduct? Whatever. But that person's social is not going to show up on any unemployment records because no one's been paying for their unemployment. So what it will do is trigger a hearing quickly that says, hey, this person says they're your employee. I'd like a quick hearing for you to tell us why they're not your employee. And when that happens, in that hearing, it's going to be very tough for you to justify. And the problem with that is the DOL never stops with the one employee, okay? Normally, it is the state versus your little company in that case, and they're going to want to subpoena your financial records, your 1099s, et cetera, and they're going to go contact those people and find out if they should have been employees. The state has a vested interest in you paying that unemployment. The state has a vested interest in you paying their income tax, and it's automatically reported to the federal government, okay? It's a bit of a booger. The other thing that can happen is if you're in a state that allows for lawyers to be DAs, it doesn't have to be the state. It doesn't have to be the Department of Labor. This is where it gets real scary. Morgan & Morgan can make some money with your misclassification. Okay? If you misclassify them as independent contractors, and it's in a state where attorneys are allowed to bring suit over this, a civil suit, then the dollar figures are quite large. You wind up owing a lot. And they'll take their third. That's what most of these cases are taken on contingency. They'll subpoena your records. They'll grab 20, 30, 40 prior independent contractors, put that all together, exaggerate the claim, and look for a pile of money. That's that class action litigation part. Okay. The other piece that comes up is if you have both. These are larger companies. Say they have 10 or 20 employees and 5 or 10 independent contractors who maybe should have been employees. They gave benefits to those who are employees and not those who are independent contractors, right? They don't get the major medical. They don't get the retirement plan. If something comes up where one of those independent contractors gets cancer and doesn't have health insurance, a lawyer's going to be knocking on your door, right? Because if they can claim that they were supposed to be an employee and you didn't offer them the health insurance that they would have gotten as an employee, then you're on the hook for those medical liabilities. Yeah. So these numbers can get real big, real fast. Here's a side note. For those of you in this world, there's Employment Practices Liability Insurance, EPLI, okay? Look closely at your policy. Most of them, like the ones that are endorsements to business operator policies, are like 25 grand. There's nothing, that's no coverage. It barely covers the lawsuit. For those who have actual established EPLI policies, 100, 500 million, look at your policy. The cheapest ones exclude wage and hour violations and exclude independent contractor misclassification. It only covers the people who are employees by your designation. So I want you to take a close look at that. Lyra asked, what kind of paperwork should a company have to back up their work classification if they ever get audited or taken to court? When you look at these, use that decision-making matrix, write the independent contractor's name at the top, the contract that you're identifying, keep their contractor agreement, go through these factor relationships, right? These factors, and do them for each independent contractor you're determining to be a 1099. At the bottom, say, I think this is a 1099, sign and go. We'll talk about a way to be very sure, but it takes a while. That's the basic, is you looked at this and you think they're an independent contractor, and here's an independent contractor agreement. That's 90% of the way there. That's the 10% effort that gets you 90% of the way there, okay? So you want to document this for each independent contractor that's even marginal, okay? The financial consequences of getting this wrong are around two. One is minimum wage and overtime shortfalls. If they're supposed to be an employee, they're entitled to that Fair Labor Standards Act stuff. Okay. And if you were paying them $200 a class they taught, or $100 per client that they took care of, you don't have hour records. You don't know how much they worked. You don't know if you met overtime minimum wage requirements. And that is where a lot of the class action suit comes in. They get 30 or 40 of these contractors together and say, you paid me $100 a week, right? But I was working 40 hours a week for you, or 20 hours a week for you, or 30 hours a week for you, or 60 hours a week for you with no lunch. And you don't have any records to support otherwise. You can figure something out to give an implication, but dang, it's tough. And so you wind up settling because the dollar figure gets real big real fast. Okay. Minimum wage and overtime is a big deal. Even beyond that, you are responsible for not just the employer share of Social Security and Medicare, but also the employee share. So you normally would have had to pay 7.2% on their payroll, approximately, for their, as an employee. You now have to pay both halves. Okay. Of course, you also have to pay any state unemployment or federal unemployment going back as well. The back pay is 2 to 3 years as a rule, by the way. So that's a key thing. It's 3 years in the case of intentional disregard, 2 years in the case of unintentional. Okay. These numbers get big. Additional consequences include the legal fees to defend yourself, state misclassification penalties. For example, California just levies an extra $5,000 per worker that's misclassified. Common. A lot of states do that. Class action exposure. So it's not the one employee or worker that you've screwed. It's always all of them. They always pull that out very quickly. And then the reputational risk. This kind of stuff can really, really upset your potential clients. The people who are suing you are going to be very vocal. You're not going to have good Reddit reviews. It's not fun. So these are some of the key consequences of that. All right. Last 10 minutes or so, I want to talk a little bit about the easy ways to spot this. If you've got clients and you issue a bunch of 1099s as their CPA, everyone's a contractor, probably not right. Unless the owner is providing all core business services and they're contracting out sub-services that are not related to the core business operations. Okay. No time tracking or PTO policies. This comes up because, again, you wind up with people who are independent contractors and they just let them work whatever they want. Again, makes sense if they are actually independent contractors, but it's kind of a bad sign because if they're misclassified, you have no records at all of what they actually worked. So when that suit comes, they're able to make up a lot of stuff. I speak of this from experience. Every one of these that I've been involved in involves, allegedly, employees who say they worked 40, 50, 60 hours a week, or independent contractors on those. So that's a key thing. Contractors with regular hours, business cards, or a company email, right? They should be independently established businesses. It's very rare that they're going to wind up looking like an employee. If you don't see any overtime across the entire company, that's kind of a separate issue. But again, another sign that maybe they're not doing withholding and stuff of those correctly. There is actually there's a better one. There's a lot of key signs on there, and on that downloadable, we have 10 signs your client may be misclassifying employees, workers, and it actually goes through just 10 easy checks. I highly recommend incorporating 5 of those into your discovery, into your plan when you bring on new clients. You always ask them, how many 1099s am I issuing? How many W-2s? How many vendors you got? Because you know you got to do W-9s. This is an opportunity to deepen your relationship with them or potentially generate additional revenue or refer someone like us to really dive in and fix these issues, okay? But going through each one of the W-9s, whenever they say, I've got a new vendor, taking a look to see if there's a contract, seeing if they have W-9, if they're an independently established business, if they're outside of the core services of the organization. These are easy checks you can do. So those are some of your key red flags, and I highly recommend you download those. Lexi asked, if my contractor is in another country, does U.S. worker classification law even matter? No. If they are a citizen of another country, only performing work in another country, your U.S. compliance is there. You would fill out a W-9 BEN. That is where the foreign worker says, I'm a foreign citizen working in another country. I have nothing to do with U.S. employment laws. And the IRS will pass it. The problem is the foreign country. The foreign country may have a lot to say about whether you're an employer or an employee. I had a group that actually ran into this in Canada, right? They were US based. They hired a couple of people in Canada and just said, I'm just going to pay them. Canada came down on them like crazy. Philippines, India, Ukraine, they have laws too. If you violate them, they would issue a warrant for your arrest. The likelihood of being extradited there is very low. But you do run other major risks. When you operate illegally in another country, you are an outlaw. Okay, this is not necessarily part of this. And if you guys are interested in doing a lesson on independent contractors and international law, I can talk to you. We'll talk to Earmark about setting something like that up. But the difficulty in international contracting is if the contract is illegal, just like it would be here. If you write an independent contractor agreement that says you can't sue me or you have to deliver my drugs, this is an illegal activity, right? The contract is unenforceable. Independent contractors in the Philippines or India or Argentina or Ukraine, you're writing a contract, they sign it, but you have no enforcement mechanism because it's likely that they should have been employees by Argentinian law. Okay. And under that circumstance, they would have no duty to keep your information confidential, no duty to not sell it. They're not thieving from you. You gave them access, and you don't have standing in that country. Okay, so it's normally worth it to find an employer of record who can work with you internationally, BPO company that will hire them, you hire them, et cetera, that can enforce your mechanisms internationally. Very important piece. We're going to keep on rocking. If moving from all 1099s to all part-time employees, there are additional red flags for permanent part-time employees to look out for, outside of unemployment tax, et cetera, that we will need to pay. We're on a 20 to 25 hour work week. I'll come back to that, Jessica. That's a good one. That kind of goes with Jen's question. If my client only has 1099s, everyone's 1099, we'll move them to W2s be really hard. Let's talk about how to fix this, okay? Now, you've screwed it up. For whatever reason, back in the day, you made the wrong choice, and now we're in this position. How do we fix it? All right, there's the on-screen answer, okay? And then there's what happens most of the time. Option 1, fix it going forward, okay? You don't say anything. You say, hey, everybody, we're going to hire you as an employee starting September 1. It's August 12th when we're recording this, and we're so excited. We're going to be employees. We're going to track your hours. We're going to pay Jessica minimum wage, overtime, assume because they're probably not going to be FLSA exempt. Whether you can pay them a salary or hourly is a whole thing. It's called FLSA exemption, and that's a topic for another day. Again, if you guys would like a webinar on that, let me know down in the comments. We'll be happy to put something together for you because that can be just as complicated. For now, let's assume they are not FLSA exempt. You're going to have to pay them hourly. You're going to have to track their hours. And what I would be on the lookout for, Jessica, outside of unemployment taxes that will need to be paid 20 to 25 hours a week, is you got to go check your state regs, okay? And your city regs. Really, really important because lots of states and cities have additional regulations that are going to apply to employees, even part-time ones, right? If you're in New York, for every 30 hours they work, they get 1 hour of sick leave, right? Missouri, I don't think has one, Missouri, but Chicago, the city does, and it has a disability program, okay? So you have to get into the weeds a little bit on those. They are employees. It's not that hard to comply, okay? Look it up. Talk to an HR company like ours. We'll take care of you, or figure it out yourself. But yeah, you want to look at the leave regulations. Those often catch you off. You're going to have to do employee notices, right? So you want a labor law poster. If you're digital, you're going to need to distribute those digitally. And then you're going to need to think about, of course, the taxes and payroll stuff, okay? Those are some of the key ones. Now, just changing them September 1 does not fix the many years that you have been incorrectly classifying them. You are on the hook You are an outlaw. Who knew you accountants would be such dangerous felons? You're not felons, but you're going to wind up on the hook for some stuff. There's a rescue program. At the federal level, there's the Voluntary Classification Settlement Program, VCSP. It requires that you consistently treated workers as contractors. It doesn't work if you have some people who are employees and some people who are 1099s in the same role. You can have some employees and some 1099s, but like they can't be both teachers or both bookkeepers, okay? It's got to be by job, basically. You actually issued 1099s. You weren't just paying these people cash and not telling anybody. You have to actually have a record of 1099. And you cannot be under audit. If they've started an audit, you are not voluntary anymore. Okay? I want you to check out IRS Form 8952. Again, at peopleprocesses.com/earmark. The third downloadable is a guide on this. It's very basic. It says where to get the form, some of the instructions. This normally, I recommend a lawyer. I know I hate to say that, but you need a lawyer a lot of times, a tax attorney to help represent you in this if it becomes problematic. But it's actually really easy until it's not. Right? Like most things, it's like it works. It's great unless it screws up, in which case you need a lawyer. So I'd start with the lawyer. But if you're a small business and you're freaking out, this is the way to get your stuff straight at the federal level. Without the VCSP, you owe the full back taxes. And that is going to be there as a liability for 7 years. Okay. So even if you fix it going forward, and fixing it may get some people curious. Well, what about the 3 years you just paid me 1099? It's kind of scary. It's kind of scary. So fixing it can often trigger people to be curious about this. And then you're in trouble for the years past because they realize they could get all their Social Security contributions. They've paid self-employment tax, remember, 15.2%. They get all that back and you get to pay it. Plus state unemployment. Plus, as we've talked about, minimum wage and overtime violations and problems like that, not required breaks, paternity leave, maternity leave, whatever, state disability, whole pile. At the federal level, employer and employee share of their Social Security and Medicare and FUTA. With the VCSP, you owe 10% of the employer side taxes only. You just went from 15.2% of all of the payroll that you mispaid, 15.2, 14.7, whatever. Depends on your Social Security Medicare amounts, right? Both employer-employee down to just 0.72, okay? So you look back at all of the misclassifications you did going back 3 years, and you say, I'm so sorry, boss. Here's 0.72% of that. And the IRS will forgive you. You don't owe penalties and interest. And they will not do an employment audit on your past year. They actually issue you a clearance letter. It's an amazing program. You should be familiar with it. VCSP. Because again, your clients are going to screw this up and you need a solution. Okay. So along with actually doing that work, there's some key thoughts here, whether you're just going forward or you're going to fix it going backwards. Treat them as new hires. Okay. You're letting them know we're not doing the independent contractor thing anymore. We're excited to announce new employment positions starting October 1. Here's your offer letter. I'd like a W-4. I got to do I-9. You got to do your handbook. You need to onboard them. Okay. Just like a new employee, that's going to really help you not screw up stupid employment things. Speaking of, right, Jess, when we were like, hey, moving to all 1099s, like they're new employees. You may also want to consider doing that on January 1 so that you're not issuing a W-2 and a 1099 in the same year. That's not legal advice. That's just having done this a few times. It's kind of nice to do it on January 1. I don't know that it's appropriate to wait that long. If you know it's a problem now, that's a legal risk question. I'm going to defer to your attorney. But if you do it on January 1, you're not issuing a W-2 and a 1099 in the same year, more likely to not be as problematic. And like any employee, you need to re-explain benefits, overtime pay, benefits eligibility, legal protections, and you need to prevent the perception of demotion, right? Some independent contractors feel like they're running their own shop, even though they're not. They do what you say, when you say it, using your software and your training, right? You want to invite them into the new company you're building. Very excited, that kind of stuff. Okay, so that's something we do a lot on our side. Of course, we help evaluate whether or not people are independent contractors, whether there's a risk here, and then help correct. And a lot of it's communication, right? It's basically hiring all your independent contractors. So that means recruiting them, getting them excited about it. It's a positive, okay? Post VCSP risks, if you go down the VCSP route, a couple of keynotes. You do get heightened IRS scrutiny for 3 years. It says it right there. So do not screw it up going forward. The reclassification is permanent. And the problem is it doesn't remove state liabilities, okay? So if you do the VCSP program, it's going to fix your federal liabilities, probably satisfy your employees. But if they do wind up going to the State Department of Labor, this doesn't settle that. Now, a lot of times the state regulators will they'll say, look, you voluntarily fixed this already. They'll come to some sort of settlement or agreement with you. They're not going to throw the book at you. They're not going to put you in prison. But it doesn't get rid of state liability. So you need a state attorney to think about that as well, okay? The times that we've gone through and done the VCSP, we have actually not had the state come back. It's been purely federal, all taken care of. Employees went fine. Things were good. I think it's a good way to do it, but I can't guarantee that. If you're in California, you did it wrong, they're going to punish you, okay? Oh, speaking of California, final pay rules. That's another key thing, right? Some of those key HR things of employment, even for part-timers. You got to pay their final pay on the day that you terminate them. You got to make sure you're paying out PTO, sick leave, that kind of stuff. Sorry. Did I get blurry? There we go. All right. That 8952 guide is on our website. Let's recap it all because we're finishing up. Classification is a legal determination, not a business choice, not a worker choice. CPAs like you are uniquely positioned to identify misclassification patterns, and there's a right way to fix it, but the client must act before they're audited. Otherwise, they're going to get the book thrown at them, and the penalties are insane. You can reach me at Rhamy at peopleprocesses.com. If you have any questions at all, at peopleprocesses.com/earmark, we have those 3 downloadables, your classification metrics, your red flag checklist, and your IRS Form 8952 guide. Really, really useful. And of course, you can qualify for CPE credit for attending this and filling out your questionnaire on the Earmark app. So thank you all for attending. Did I answer everybody's questions? Do we have any final questions that people would like to ask? I'm going to assume not. Thank you. Thank you, Lyra. I appreciate that. I will be more than happy to help in any way. You can always drop an email and I'll be more than happy to help. Y'all have a great day. Thank you for tuning in.
Today's event has ended. To earn CPE, go to earmark.app or scan the QR code on the screen. Then log in or create your free account. Search for the course by tapping on the magnifying glass icon on the home screen and then entering the name of this event. It takes a few days to make the course, so if you're attending this event live, keep an eye out for an email letting you know when the course is available. Pass the quiz to earn your CPE, then tap the button to email yourself a certificate. Stay tuned for more events from Earmark. Thanks for joining us, and we hope to see you again soon.